And we're live. Welcome everyone to CapitalCosm Live. It is February 1st, 2026. And we are a weekend removed from the I think this was probably the biggest single day crash in silver prices of all time. A 30% crash on Friday. And now we've got the market open, the overnight market open, that is. So let's go ahead and turn over to that. So we've got silver now at $81. We closed out on Friday at 85. We're down slightly so far in the futures market. I know they say it's up 4.25%, but CNBC is just wrong here. We closed out at $85 in this case. I don't know what's up with their accounting mechanism or whatever, but we're still pretty much in the red here, guys. We are just 45 minutes removed, I believe, from the Asian Open. But what I'm hearing is that China is not trading today, so that may be the reason why we haven't seen a jump in the metals price. So be that as it may, we've got some interesting developments we're going to look at today, or tonight, I should say. We've got a number of data points I'm going to pull up here. We're going to look at the charts like we always do. We're going to look at Twitter. We're going to see what the sentiment is like. And then we're going to take some of your, we're going to read some of your super chats. If you guys decide to leave any super chats, be sure to do so. I will read them in the, throughout the entirety of the broadcast. So with all that said, as always, with any one of these videos, nothing in this video is financial advice. I am not a financial advisor. Please do your own due diligence. And remember to hit that like and subscribe. If you'd like to get this stream out to as many people as possible, then let's try our best to overwhelm the YouTube algorithm. Hit that like, hit that subscribe button if you haven't already, so you don't miss another one of these live streams or any one of my interviews, actually. And also hit that bell notification, because sometimes YouTube just won't notify you if I'm going live or not. So you want to hit that bell notification and get a notification as to when I am going live. So, all right, that's enough yapping. Let's get down to business here. So, all right, well, it looks like we clawed our way up to $83 right now here on silver. But a quick recap of what we're looking at so far tonight. $4,600 gold, down 2.4%, $113. And oh, by the way, if my sound's coming off a little muffled, or is my sound coming off crisp and clear as well? Let me know in the chat too. Give me a 1 in the chat if my sound is my audio is doing well. Anyways, copper down from $6. We're currently trading at $5.80. Platinum, $20.59. We're just, we were just 1 week from a $2,800 print on platinum. That is bonkers. So yeah, I mean, silver wasn't the only one that got shellacked. Platinum also took a pretty big haircut too. I believe it was a 30% plus haircut as well. So let's go ahead and take a look at the hourly charts here. And you can clearly see we opened up. So we closed out the, you know what? I'll make this a little clearer for you guys. So we closed out Friday. There you go. So we closed out Friday right here for silver. This is about $85 or so. This is the silver spot price. And you'll notice that this gap between this point and this point, this is the open earlier tonight at 6 p.m. Eastern. So we opened up the day at 82.20, down almost $2.50 from the close. That big washout from Friday. Now remember, we got as low as $73 at one point, almost $72 on the spot price. So here we are, $83, $82 at the open. We hit a low of 77 and then clawed our way back up to 88. So even in this overnight trading, it is extremely volatile. We're just going one direction to the other direction. And it's just bonkers. And here's the other thing, guys. These things, the CME was supposed to have circuit breakers. When assets start trading below 10% within a single day, that's a wild swing. You're supposed to have these circuit breakers turn on and to halt trading, let everyone get their bearing, and to kind of let the fire subside. But that didn't happen on Friday, interestingly enough. circuit breakers to the upside, that's perfectly fine. But also when it comes to the stock market, remember during COVID, during that March, 2020 crash in COVID, they would activate the circuit breakers for hours on end. Anytime the broad market fell, I believe it was like 7% was the number, was the threshold. They would activate the circuit breakers, pause trading, halt trading, and then reopen the markets in a couple of hours to kind of subside some of the momentum to the downside. However, they didn't do that in the silver market. They didn't do that with precious metals. Funny how it always works. Very interesting. But be that as it may, so far tonight, I mean, we're trading between 77 and 88, an $11 range just in the last few hours. So the volatility hasn't subsided. We're still going. So we're currently at 83.65. And this was, so this is right now, actually. 83.77. And and it's not just precious metals. You're also seeing it in Bitcoin as well. Bitcoin crashed down to $75,000 earlier in the day today. And Bitcoin's been taking a shellacking too. Look at that. Look at that pattern here to the downside. It is pretty much sitting here right at support. And it doesn't look good. You've got a little triple bottom here. Third time's the charm, right? So Bitcoin looks like it's about to break down below this support line, in my opinion. That's not looking good for Bitcoin. But let's go ahead and take it back to the precious metals. This is what we're looking at in gold as well. We hit a high of 5,600 back on Thursday. And to kind of recap how things went on Friday for gold, we opened up today around 5,400, got as low as 4,600, and then closed out the day at just a little shy of 4,900. Today, however, let's look at the minute by minute candlesticks. We opened up today down from the 48.95 close on Friday, opened up today or tonight at 48.34 and hit a low of 45.85. We've recovered since then from that, currently trading at 47.35. Now, this doesn't look like a good on the 1 minute candlesticks. This is an ascending wedge. Doesn't look good. Looks like gold might have some downside here. Anytime you see these ascending wedges, those are usually downside indicators. I could be wrong. Technical analysis isn't right 110% of the time. It's not even right 90 or 80 or maybe even 70% of the time. But it's one of those things where it's like if it's right 60% of the time, then that small edge is what allows you to get an edge. It's that small margin of efficiency. But it looks like it's breaking out of the pattern now. We'll see what happens with gold. At least this is in the near term pattern. Oops. And let's take a look at this volume too. This was record selling volume here on silver, record selling volume here on gold, and probably the highest volume of all time. Yeah, there it is right there. We haven't had volume like this ever in the gold and silver market. So it's definitely piling on. Let's not forget our good friend platinum, the other white metal. Let's take a quick recap on that. So platinum hit its high at 29.30 last Monday, a week from today, and then it's just been all downhill from here. If you look at the 1 minute candlesticks, platinum tonight is trading at 20.67. It did touch that almost touched that $2,000 support level. but seems to have bounced off of it. So we'll see what happens with platinum. Platinum is now down over 33, close to 33% from its high of 2,900. Yeah, I'm reading some of the comments here in the chat. One of you guys are saying that circuit breakers kick in at plus or minus 10%. Yeah. And we were down like plus 30% at one point on silver, and that did not kick in. They made up some excuse that they had like some sort of glitch in the system. Do you believe that? Do you buy that, guys? Let me know if you buy that story. Do you believe that there was a glitch in the CME circuit breakers? Or do you think that there's something else, probably more nefarious? Let me know in the chat. So here, this is where we're at right now. And now I'm seeing silver spike up. Okay, so we're getting a little move to the upside. You'll see we have an ascending wedge here as well on silver. So these are actually bearish patterns, so we could see some downside moves. $85 right now. So yeah, this thing is just all over the place. So here's the view of all the trading that's happened tonight. So we've gone from 77 to 88, down to 78, and now back up to 84, 88. So we'll let that simmer for a bit. But in the meantime, I want to divert your attentions to what's going on with retail. So let me get it off. Let's switch the screen up a bit. Okay. So for those of you who haven't seen this chart yet, this is a chart of, so this is Google Trends data. This basically calculates the number of times people search for a term. So what we're looking at here is for the volume of people searching on buying silver in blue and selling silver in red. And this is across the entirety of the United States. And this stretches for 3 months. So what you'll notice is that we had a big spike in selling silver, people searching for selling silver on the 13th. Now, interestingly enough, the 13th was right around here. So retail people were searching for selling silver in the midst of this leg up in silver. Now, on the 28th, we had a spike in the blue. The blue denotes the number of, the volume of people searching for the term buying silver. Now, that happened on the 28th, which was right here at the top. So isn't this interesting? So this basically, I mean, you could say Google Trends basically called the local top, at least on silver. Very fascinating stuff. Now, this is confined within the United States. If we expand our search worldwide, we'll see if that gives us any difference. Now, it looks like the two are correlated now that you've expanded it worldwide, but you did see a spike in selling, so people searching for how to sell silver on the 13th. And you also saw that same spike as well on the 28th. But from the world's perspective, selling silver also spiked a day before the big sell-off on the 29th. So that's interesting. So it seems like the world is a lot more savvy when it comes to trading in and out of silver versus the United States in this case. Yeah, I'm seeing a lot of you guys saying they halted trading in China. So there's something big going on in China. I don't know exactly what it is. We'll check Twitter here in a second. Maybe there's some new developments we can see on Twitter. But let's go ahead and continue on. This is another chart. This is searching for the term silver price. Now, the reason, I put silver price in here is because, I believe it's a fair gauge on interest, people's interest in the silver space. When you're either invested or looking to buy or sell silver, what are you going to search most often than not? You're going to go to Google and you're going to type in silver price. And so this is a chart of the volume of search queries pertaining to silver price. You see a spike here on the 29th, a day before the big crash. And then here's the 30th, which was, wait, let me make sure I'm getting my dates right. Yeah, 30th was Friday. Yeah, so 30th was Friday here. So this was literally the top right here in interest. And then this value, you're now at about 43% of the interest here at the top on the 29th. So from a retail standpoint, you could kind of see some of the topping patterns in that sense with silver. You know what? I haven't done this yet, but I wonder if you could see the same with gold. So I'm going to type in buying gold and selling gold. See if that gives us any different results. Yeah, so buying gold topped out sometime in November. That was peak gold interest. And let's see if we can expand it out for a year. Yeah, the peak was right here on November. We go back to our gold chart, November 29th. You're looking at around, this is when gold was at around $4,200. So not much signal when it comes to gold, but the signal that we saw primarily concerned silver. Here's another interesting data point that I think you guys should be wary of. So this is the Sprott PSLV page. So if you're not familiar with PSLV, it's essentially the second biggest silver trust outside of SLV. And it's 100% backed by silver, by physical silver. So one promissory note of silver is backed by 1 unit of silver, unlike the the shenanigans that you would see at the likes of SLV, where you've got multiple claims to the same ounce or unit of silver. In the case of PSLV, it's a lot more rigorous, and it's a lot more rigorously backed than what SLV has, which is backed by JP Morgan. JP Morgan is the custodian of PSLV silver. But here is what's interesting. So this is the premium to discount ratio for the market price to NAV, the net asset value. And basically, when you see this line, you see this zero mark here. I don't know if you can, let me zoom in a little further. Oops. You know what? Let me make this bigger so you guys can see it better. Nope, never mind. All right. Well, hopefully you can see that. But anytime this line here goes down, that means that you're getting more of a premium to discount. Or sorry, a discount to NAV. So right now, as of January 30th, the net asset value of all the silver in the PSLV trust is currently valued at $29.15. Now a single share price is valued at $26.41. So you're actually getting pretty much a 9.4% discount on the silver that PSLV share represents. Now, what's interesting about this is, and my good friend Bob Moriarty pointed this out last week, and he was basically talking about this basically portends to lower retail interest, because when retail actually starts buying into this stuff, they're going to start buying into the ETFs, which includes PSLV. Now, the biggest one is SLV, but it would be disingenuous to say that PSLV would not also get a bid in that sense as well. So when that happens, typically in the silver bull markets, you start trading at a premium to discount, a premium to NAV. That means that people start bidding up the PSLV share price much faster than PSLV takes to actually buy the silver and bring it into its depository to back to be proportionate with that price in the net asset in the share price. But what's happening is actually the opposite. That you're actually starting to see a discount to the net asset value of silver. So let's say they have this is just a simplified example. Let's say they have 100 ounces of silver, and silver's trading at $80. Okay. And they've got 100 shares. Make sure it makes sense. Okay. So they got 100 ounces of silver at $80. And so that will take you to around $8,000 net asset value, right? If you've got 100 shares, then each share is worth $80. But what if the share price, that's what it would be worth in theory, right? But in this case, let's say PSLV is selling their shares for $72 a share as opposed to $80, even though they have 800 ounces of silver. That means that there's a 10% discount to their NAV. And that's basically what's happening here. And the only time in history, in the history of PSLV's existence, that we've hit this level of discount to NAV was back here in March of 2022. This was the COVID crash when everything sold off. This was a big panic crash. So you guys make of that what you will. So one could read this as a potential bottom in silver, potentially. Can we get lower than this level? I guess we could, but probability-wise, you would have to see volatility to the downside on PSLV that would have to exceed the COVID 2020 crash. So again, make of that as you will. Let's go ahead and take a look at the gold and silver price. Do a quick checkup here. Yeah, so it looks like gold is trending down. So here's the ascending wedge pattern that I pointed out a few minutes ago. And it looks like it's playing out like I predicted. Yeah, so you've got the downside here moving in gold. You've got the downside. You've got some downward price action moving in silver as well. Anytime you have these, anytime you see these rising wedges, guys, it usually is always followed by downward movement. So I pretty much called that on the spot. And here you've got a descending wedge right here, back here. I don't know if you see it. And what did you have? You had a spike up. So a descending wedge is bullish, an ascending wedge is bearish. Just so let's keep that in mind. If you're ever looking at these charts, you can usually just eye them out. You don't even need to draw lines or anything like that. Okay, so let's go ahead and move on to the next item here. So, yeah, quick note, guys. I did open up a Discord. And so one of the perks of being on my Discord is that you can send me content to react to on these streams live, or things to ask my guests and all this other stuff. So we've got something from one of my followers here. This is from Rocky Vista, and he wants to, we just started this thing up. So join up now. Let's get this community. Let's broaden out this community, guys. I'm on here. You can chat with me. You can leave me content to react to. You can make guest recommendations. You can post news items in any one of these channels here and so forth. So Rocky Vista, he wants me to go through this Substack and react to it. So hi, Danny. Any chance you're going live tonight? Would be great with your audience to follow the market at the Shanghai. Well, that looks like it's closed. Wondering what the markets are going to look like on Monday, blah, blah, blah. Did you see the link? I don't mean to say blah, 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 but it's getting straight to the point. Did you see the link BAZ Bass shared in your Substack comments? I opened it and found excellent analysis. Here's the link, no paywall. So we're going to look through this Substack link, which is this one right here. So I actually haven't read this yet, so you'll be getting my authentic response in real time. But before we get into that, I do see we have a super chat from Jack Lyons. Jack, thank you so much for the super chat, my friend. Not gonna lie, something is scary. I like March 2020, but we don't know what's going on yet. Guesses? Epstein files out. Cartel also kidnapped mining employees. in Mexico. Oh, I didn't know about the cartel stuff. The Epstein stuff is wild. Like, I had to actually scourge X to find any news on silver because I don't know about you guys, but my X feed is just filled with like Epstein file dump after Epstein file dump. Like, it's all over my feed. I can't escape it. So I actually had to do a search on silver on X to actually try and get some silver stories for you guys. But yeah, it does feel like there's something in the air, and Jack. I don't think any one of us knows what's going on. But yeah, I mean, you keep hearing like about this imminent war stuff that's bound to happen in the Middle East any day now. Um, I believe there was a bank, a small bank that failed on Friday too. And some, there was some speculation that they had to sell off some assets, and that could have been the trigger for this massive sell off. But I don't think that's the case. The bank that it was like, because this sell off had to be in the trillions of dollars. Okay. That bank did not have enough assets to move the market that much. So I don't think it was that bank. And then of course you've got the files coming out on Friday too. The metals crash on Friday. What else? You had that bank again. That regional bank failure, which could be the start of something bigger. I don't know. I guess we'll have to wait and see this week. But is it all connected? I don't know. I posited that question on my X account, and if you guys don't follow me on X, be sure to do so. It's at CapitalCosm. And yeah, I don't know. Good question. We'll have to wait and find out. Thanks, Jack. All right, let's go ahead and go through this Substack article from my Discord. So Friday, January 30th, 2026 will go down in history as the day silver experienced what statisticians would call impossible. Let's run through the superlatives because they're genuinely mind-bending. And here's a chart of silver going from $120 to 80 some odd dollars. Silver crashed $31 in a single session. Let's make this easier on you guys. This better? Okay. Crashed 31% in a single session from Thursday's all-time high of 121 to settlement at 78.53. That's a 14 sigma event if you use a 10-year volatility baseline. For context, a 7 sigma event should happen once every 3 billion years. We're talking statistical impossibilities, the kind of moves that only occur when something breaks. So I am a statistician, by the way, by trade. I really am. And so one thing I will say, I understand the idea behind this, but you can really only apply this to things of normal distribution. Silver price swings and silver volatility is not normally distributed. So, there's a little bit of nuance there, but I get the idea. A 30% crash in a single day is extremely odd, highly improbable. But even against January's already insane volatility, this was a 6 to 7 sigma move. And if you're not scared witless here yet, we've had multiple 4 to 5 sigma events this month alone. January 26th saw a 14% intraday swing, up 7%, then down 7% in hours. Yeah, that's exactly what we've been talking about. We were just looking at all these swings up and down just within a matter of hours, within the open of tonight's trading. What are we at now? $82. This is pretty much where we opened the live stream at $82. But it's just been bonkers. We're trading range bound $11 so far tonight, and it's only 3 hours into trading. It happened on a Monday. Then Tuesday brought another 8% move. Thursday, another 6% swing before the all-time high. So here's an interesting point that I would posit to you guys. With silver swing up and down, would you rather be out of it and out of the volatility, or would you rather be in silver and capture that upward volatility as well? Because here's a sentiment check on you guys. I want to ask you guys this. Survey time. Would you feel worse if you sell silver and watch it go parabolically higher than where you sold it at? Or would you feel worse if you didn't sell and watched it crash down to some arbitrarily low level? Give me a one in the chat if you would feel worse seeing silver parabolically rise after selling it. And give me a two if you would feel worse having not sold it and seeing it crash. And explain why. I'm interested in seeing how you guys feel about this. Okay, so we've got a couple ones, twos, two, one. So it looks like it's split almost even. Yeah, it's about evenly split. Interesting. But yeah, let me know your thoughts in the chat. All right, so we'll keep reading the article here. I see some of you guys are mentioning that we're about to get hit by a Carrington level event. I did hear about that, by the way. There's an X8 solar storm from the sun that was just unleashed an hour or two ago that's heading to Earth. But I don't think that would be a Carrington level event. The Carrington level event that happened like 100 years ago or over 100 years ago, I think that was like an X40 class solar flare. I mean, I'm not a geophysicist, but I think that was the case. I don't think it's going to cause any like worldwide blackouts or anything, but what do I know? I'm just a guy covering silver. So anyways, when you start stacking 4 sigma, 5 sigma, 6 sigma events back to back to back, you're not in a normal market anymore. You're in a regime change. The volatility itself becomes a signal. Something in the market structure has broken and price is searching for a new equilibrium while leverage unwinds violently. A 6 sigma event should happen once every 506 million days when humanity was living in caves. We've now had 4 of them in January alone. And boy, did something break. Across all precious metals, silver, gold, platinum, palladium, roughly $7 trillion in market capitalization evaporated in 36 hours. Yeah, exactly. So like, these people that are saying that this was like some small regional bank that had to unload their gold and silver and stuff, like, come on. I don't believe that. $7 trillion. And it all happened at once. I don't know if you guys caught it, but it happened. I believe it actually started on Thursday, later in the afternoon, I believe. We'll look at the chart here in a second. But all these metals started trading down simultaneously in coordination. Very odd stuff. Silver alone shed somewhere between $44 billion and $143 billion, depending on whose above ground inventory numbers you believe. The SLV saw its worst day on record, down 28 to 31%, depending on the minute you checked. Gold had its steepest daily drop since 1983. This was worse than 1980s Hunt Brothers collapse in percentage terms. Yeah, worst ever day for silver of all time, down 28 to 31%. So let me repeat, worse than 1980. Okay? But something is wrong with this picture. Final data. So what are we looking at here? Not quite sure. Total volume, 226,975. What is this? Okay, so COMEX silver futures, the actual exchange where physical silver is supposedly traded, saw a volume of around 227,000 contracts. Compare that to January 27th, just 3 days earlier, 272,000 contracts. Read that again. The worst crash since 1980 happened on lower than recent volume in the futures market. Well, wow. Interesting. So the volume went down, but we saw the worst crash of all time. So just 3 days before then, volume was 272,000. The day that it crashed was 227,000 contracts. I didn't know that. So let's see. So he's singling out Deutsche Bank, JP Morgan, and this is COMEX issued securities. Deutsche Bank issued 2387. JP Morgan issued almost 12,000 securities on the COMEX. So what is this? This is, settlement contracts. Okay. And then the delivery notices from January 29th, the day silver hit $121, tell an interesting story. Gold saw 28,484,000 contracts. That's 2 million ounces in delivery notices. The largest single day of gold delivery activity in recent memory, right before a 12% crash. Interesting. Complete coincidence? I'm sure it is. He's being facetious here, obviously. Thursday, record delivery notices at $5,300 gold. Friday, 12% crash to 4,700. Those deliveries settle next week at the lower prices. Interesting. For silver, January 29th showed 1,881 contracts, but that's before the massacre. So what does that equate to? How many ounces does that equate to? So wait, this was, gold saw 20,000 contracts. That's 2 million ounces in delivery. So let's keep it simple. Let's do 2 million multiplied by 5,000. That is $10 billion in gold deliveries. Okay. So $10 billion, I mean, that's still $10 billion in delivery. I mean, it's interesting that they were able to time it right before the crash, but it's not like it's not, the gold market cap is like $30 trillion. So, okay. So, January 29th showed 1,881 contracts, but that's before the massacre. The January 30th report, which covers the actual day of the 31% crash, isn't out yet. Given what we just saw in gold, I suggest everyone pay close attention when that report drops. If silver delivery notices spiked on the crash day itself, well, draw your conclusions. Interesting timing for sure. Now let's move on to SLVs. So he says here, SLV went absolutely nuclear. 500 plus million shares traded. That's 13.2 times its average daily volume. The 26th was 393 million shares. Dollar volume hit approximately $38 billion, matching the trading volume of SPY on a normal day for a silver ETF. Wow. But I don't believe for a second that this was a crash. Yeah, I'm coping, I guess. It was a grind. Look at the chart. This wasn't panic selling, triggering cascading stop losses. This was a mechanical, methodical descent from $122 to $76 over hours. Steady pressure, never spiking down hard enough to trigger circuit breakers, which halt trading on 10% moves in 5 minutes, but never letting up either. Oh, is that how they say it? So the circuit breakers only kick in when you're down 10% within 5 minutes? I didn't know that, actually. So that's why they never kicked in. So the trading that we were seeing, they kept it so you would never get below that 10% level within a 5-minute time interval so as to not trigger the circuit breakers. Is that true, guys? Can you guys fact check that? People in the chat, I don't have time to fact check it right now, but fact check it. Let me know if it's true or not. That kind of selling doesn't happen organically. You can't accidentally maintain 2 to 3% downward pressure every 5 minutes for an entire session without coordination and firepower. Someone had enough ammunition or enough backing to sell continuously for hours, pacing it carefully to avoid tripping exchange halts, never allowing a bounce, just grinding every bid into dust. And unlike China's plus or minus 10% daily limits, US exchanges have no maximum daily move for individual securities. As long as you don't spike 10% in any 5-minute window, you can take something down in one session. No rules broken. Just relentless institutional grade selling with what looks like a target price in mind. Panic would have triggered halts. This was a controlled demolition. So actually, this is the first time I'm reading this. And if the stuff about the circuit breakers is true, then it all makes sense. So hold on. Well, let's finish reading this before I ask any more questions. So the futures market, where you can theoretically take delivery of actual metal, was relatively calm. But the ETF, where you own shares of a trust that owns silver, saw the most methodical liquidation ever recorded. Spot the problem yet? This is a very interesting observation because if this is true, again, if this is true, and they were able to carefully take down the silver price without alerting circuit breakers. So this would, I mean, this would add on to the case of like, he's talking about these, 14 sigma events, these improbable, the improbable collapse in silver. The fact that it was taken down in a way that was surgical, that implies intelligent design, right? That's what it was like. It was an intelligently designed takedown of silver. It doesn't appear to be normal. What they don't put in the SLV prospectus headline, shares can be created essentially at will. Authorized participants, like big banks basically, can create new SLV shares by depositing silver or, promising to deposit silver. Eventually, when they get around to it, the settlement process, T+2, sometimes longer if things get messy. So essentially, they can create new shares of SLV to dilute the price down of the share price by just promising to add in more silver into the vault. And that could take up to T+2, 2 days from today. That's what I mean. T+2 is 2 days from today. T+3 is 3 days and so forth, just so you guys know. So on Friday, when 505 million shares traded hands, how much of that was actual silver changing hands versus paper promises written on top of paper promises? We don't know. We can't know. That's the design. Wow. So it's looking more and more likely it was an engineered collapse. But we do know this. While SLV was cratering 31% in New York, the Shanghai Gold Exchange was quoting silver at $120 to $134 an ounce, depending on the session. That's a $42 to $49 an ounce premium over COMEX settlement prices. Shanghai has actual 15 kilogram bars of 99.99% purity sitting in vaults. You want it, you pay the price, and you'll get the metal. No derivatives, no promises, no authorized participants. And Shanghai says silver is worth $120 plus. New York says it's worth $78 to $85. Which market are you going to believe? And you know what? I actually posited it. I posted the same question to my on my X account. And I basically said that is this the point where we just ignore COMEX pricing and just look at Shanghai as the true pricing mechanism of silver? So let me ask you guys a question. If you're going to sell your silver, are you going to use the COMEX price for silver for your transactions? Now, in some cases, I mean, if you're selling it to a dealer, then you've got no choice but to use the COMEX price. But let's say you're trading silver amongst friends, or you're trading silver amongst other people outside the system. Of course, owes report on your taxes too. But if you are trading silver with other people, are you going to use the COMEX price, or are you going to use the Shanghai price to sell your silver? Or in this case, even buy your silver, right? It's got to go both ways. I know if you're going to buy your silver, you're probably going to ask for the COMEX price, right? But if you're selling your silver in this case, will you be able to justify using the Shanghai price? And how much longer will it be until the Shanghai, the COMEX price, the New York price, this becomes obsolete and irrelevant. So what is this? This is the listing of depositories of the COMEX, metals depository statistics, received, withdrawn. All right, well, I'm not going to go through all this entire chart. Well, let's see what the takeaway is. As I've mentioned in previous articles, COMEX registered silver inventory has been bleeding. January's final tally down 26% from roughly 142 million ounces to 104 million ounces. That's 38 million ounces that walked out the door. So let me get this straight. Physical demand was so strong that a quarter of deliverable COMEX inventory just disappeared. But the price needs to drop 31% in one day because Kevin Warsh got nominated to chair the Fed. Sure. Here's the other thing. I haven't even touched on that. CNBC, when like CNBC often does this stuff. Like it'll say, oh, here it is. Here it is right here. Silver plunges 30% in worst day since 1980. Gold tumbles as Warsh pick eases Fed independence fear. Yeah. Okay. Come on. You think a Fed head pick is really responsible for like a $7 trillion move in the metals market? Come on. Who are you fooling, guys? Like it's always like this narrative spin on things. Just because things happen in tandem with each other doesn't mean they're correlated. That's the what are they called? The narrative fallacy, I believe. Because we as humans, we like to think of things as stories. So this happened, as that happened. Even though all two or three things may have happened independently, but we see stories in everything. So at $85 or whatever the price is after finishing this article, we're back to mid-January levels. Silver started 2025 around $30 an ounce, and we're still up 180% year over year, despite Friday's massacre. That vertical moonshot from 121 to 78 and back to 85 wiped out late month mania and probably every leveraged long position that existed. The good news is, if you want to call it that, all that leverage is gone. No more gamma squeeze, no more margin fueled parabolic moves, just whatever this market actually is when the paper games are dialed back. The bad news is Shanghai still quoting a $37 premium. India's at $28 over spot. The physical market hasn't gotten the memo about the correction. So again, you're continuing to see this dislocation between the paper market and the physical delivery market. And it's up to you guys. What do you recognize as the legitimate market? The market that actually deals with physical silver, where they actually have to deliver it from one party to the other, or the one that makes promissory notes and IOUs? Which pricing mechanism are we going to go with here? COMEX says $85. Shanghai says 122. That spread, the widest in record history, is telling you something. Friday wasn't a market correction. It was a liquidation event in the paper market. While the physical market said, not interested in your prices. Thanks. So you're watching two markets diverge in real time. One that trades promises and one that trades metal. This is a pretty good article. This is from Friday's. Oh, who is this person? No1 at No01 on Substack. So if you want to see more of his work, that's his handle. But yeah, and again, guys, join the Substack and join the Discord. And if you're wondering how you can get invited into the Discord, so you can send me articles to react to on these live streams and ask my guests, go to my Substack. There's a post. I'll send a post later tonight, linking everyone to my Discord. But there's another post right there that was posted about a week ago that says, I just created a Discord. Click on that, join the Discord, and you'll be a member here. But you've got to be a paid member to access Discord. So there's that. And we will be increasing prices, I think, the next couple of days, 1 or 2 days from now. on my Substack. It's currently $8 a month, $80 a year. We'll be increasing that to $12 a month, 120 a year. But we've increased the offering. You now get access to a Discord as well. We'll also be doing something really cool later on down the line too that I'm working on too. So, and on top of that, you still get all my videos early, ad free, and uncensored, and all that other jazz. Anyways, that being the case, let's go ahead and take a look at silver now. All right, so we are at 83.15 here on silver. Should I move my 83.18 right now. 83.04. You know, as soon as I look at this thing, it just drops. As soon as I pull up this chart, it just like takes a big red candlestick. It doesn't like being observed. It's like the quantum observer effect. What is it called? The double slit experiment, right? When you observe the candlestick, it goes down. It's only when you're not observing that it goes up. But yeah, it looks like, all right, so let's see what we can draw here. So we've got a descending channel here. Okay. Well, this is actually bullish. Looks like we're setting up for a short-term move to the upside here. Looks like it's testing the resistance line. So some decent short-term movement. Let's just put it that way. You know, you got something like this. It might come back down here, and pop back up. It's doing like a 3-hump consolidation. You know, you've got your first hump here, your second hump here, and your third hump here. The next step is shot to the upside. All right, so there's that. Let's see what gold's doing. Gold. Oh, look at gold now. Looks like it's setting up another ascending wedge here. Actually, no. Something like this. And it's kind of a weak ascending wedge. I wouldn't put too much stock into it. But okay, gold's at 47.54. Recall that we opened the night out at 48.34. So we'll leave the charts at that. We'll check back here in a minute again. But next thing I want to point you guys to is the silver mining stocks. So the mining stocks also took a hit on Friday. 14% haircut, 14.7% haircut. So wait, let me do a little survey. Do you guys like this view better, or do you like this view better? Because I know you can see the little price here on the side. Give me a 1 in the chat if you like this view better, and then give me a 2 in the chat if you like this view better. So we'll just go with whatever you guys like. So anyways, SIO is down 14.7%. Silver was down 30+%. So in this case, if you chart SIL relative to the silver price, you actually saw a spike up in the ratio. And I'm seeing a lot of 2. So you guys like this outline, this little screen better, I take it. All right. Anyways, so here's your silver miners, your silver stocks to physical silver ratio. And the fact that silver, physical silver, COMEX silver dropped 30% relative to the 14% that the miners dropped, that elicits a spike in the silver stocks to physical silver's ratio. So we could be starting to see some outperformance now in the silver stocks. Let's go ahead and take a longer term view. We have been just clawing our way up here. This is on a monthly candlestick basis. And we broke down beneath the support line here in January, which is this past Friday. And it looks like we're bouncing back up in the ratio. But this may be the time where it's more advantageous to, looks like silver miners are cheaper than physical silver in this case. Looks like they're beginning their ascent up. Now, you look at past history, you're looking at a 140% move to get back to these old tops in the mining stocks relative to the physical metal ratio. So when this goes down, this was when the physical metal was beginning to get ahead of the mining stocks. Now that we've seen a little bottom here start to form, looks like we broke down beneath the support line. Now we're retesting. We're at a retest stage. Now, will we break down below even further? In this case, the mining stocks will continue to underperform the price of silver, or will it be the other way around? Will they begin to outperform the price of silver and move on higher in the ratio? So time will tell. Let's look at Japan. Japanese 10 and 30-year yields have been on a tear. So let's see what they've been up to. Okay, let's do a one-day view. And here we are today. This is the Japanese 10-year yield. And we are trading at 2.27%. You see, we had a high here of 2.38% here on Tuesday, the 20th of January. And it looks like we've been consolidating since then. And it looks like we broke out today, tonight, actually. So, yeah, Japanese bonds are not doing too well. It looks like we broke out of this consolidation pattern. We squeezed. Yeah, this is classic consolidation. Got towards the end of it, got to the little corner here, and boom, blast off. It may come back down to retest, but I think this is your signal that Japanese bonds will continue to deteriorate as their yields continue to spike up, or their yield will continue to spike up as their valuations come down. Let's see the 30-year. 30-year got a similar looking pattern here. Kind of hard to draw a line here, but maybe something like this. You had a steep drop, breakout from this line. We'll see what happens. This is pretty much a clean cut triangle. You had a big gap here on the 19th to the 20th. You'll notice that we pretty much filled this gap here. We filled the gap and it looks like we're moving back on up. Whoa. Oh, never mind. A rider. I read that as $100. Got excited. Man. Thank you for the super chat, my friend. A Rider K. So Japanese bonds not doing too well. What about US bonds? Let's go and check that out. Okay, so we're seeing increase on the yields with okay, so this is the US 10-year yield. Kind of a similar pattern that we saw with the Japanese yield. You had this little resistance line you were forming here. You broke out of it. But this breakout occurred about 3 days ago, or 3 trading days ago. So bonds not doing too hot. And you've got this, you got this little flag pattern here, this bullish flag, and you are ready to move on higher in the US 10-year yield. 30-year yield, this thing is just kind of moving sideways here. 4.87%. The dollar DXY 97.04. We did break below this support line here, and we did hit $96 on the DXY not too a couple of days ago. So, the more we squeeze, we could squeeze on up here. We could keep squeezing until we get to this little corner here. This takes you to 99 on the DXY sometime next year. I guess it could keep going sideways. The dollar could, and you could have a little move to the downside. But it looks like it's breaking down now, breaking down below the support line, $97. Your next level of support looks like, you've got a lot of trading happen here. You could say like this little area here is just like filled with trading. So there could be a lot of, from this level down to 81. We could, I don't know. I'm not going to say we could see a free fall of the dollar down to 81, but there is a lot of trading that's occurred at this level. So, and oil, oops, what is that? Oil currently trading at 62.77. So oil's been fairly resilient to all of this. Here's your oil price. We closed out Friday at 65, and now we're at 62. So some interesting price action on oil. Let's go ahead and take a look at oil relative to gold. Let's price oil and gold. Check the oil to gold ratio. And it is still, you know what this is? This is that time when oil got to like negative $30 and just screws up the chart. But we ignore that. Let's just ignore that. We're still pretty much at all-time low territories in the oil price. And yeah, so the oil to gold ratio has been coming down for a year now. Let's go ahead and take a look at 5-year time frame. This is your oil to gold ratio. You could do something like this. Maybe something like that. It's just been going down in this channel now for 5 years. Do this thing here, bring it down, and looks like we're bouncing off this support line, and we really need to break this level here in the oil to gold ratio. But we did see turn off the volume. We did see a spike up in the oil to gold ratio as gold crashed on Friday. So that's what this is. So there's that. All right. Let's go ahead and take a quick check on the silver price, and we'll go head on over to Twitter after and read some of the news and sentiment. All right. So where are we at now? All right. So we're at 82.85. No, it looks like we have a super chat. T-Pack, thank you for the generous super chat, my friend. But they're still printing $1 trillion every 100 days, though, right? Are they? Yeah, who knows how much they're really printing? Wasn't it Elon Musk and Doge who uncovered like their magic money machines that could essentially just print dollars into thin air? So we don't even know. Like the M2 money supply report that we read is an underreporting of the true monetary money supply that's sloshing around out there. So thank you for the super chat, my friend. All right. So it looks like we broke out of this consolidation. Now we're retesting. We're back down to 82.65. We're still on the resistance line when it comes to this little consolidation triangle here for silver. All right. Well, let's leave that here. Let's see what people are saying on X. Okay, so the goal. So this is from the Happy Hawaiian. The gold to silver ratio has stayed perfectly below the 50-day moving average. That's what's carried us since August. Under the 50-day and you're bearish. If that's you, just sell now because you won't last to $200. Yeah. So what is this a chart of? So yeah, we've been below the. So this is the gold to silver ratio. So gold has been underperforming silver for quite a while now. And it's been below this red line. This red line is what you would call your 50-day moving average. We spiked up right at it and bounced back down in the gold to silver ratio. So we are still, things are still favorable to where silver is outperforming gold, even in this recent crash. Oh, so Willem Middlecoop says, oh, so we do have some Shanghai pricing coming in. Shanghai silver now trading at a 67% premium. Shanghai spot at $135.73. That is a 54% premium, or sorry, $54 premium, and that's a 67% premium to what we see in the COMEX. 67% premium. Can you believe it? Where else other than the silver market can you get like a 57% arbitrage on anything in the world? Like, it's so ridiculous. China needs silver. This is from Vince Lancy. If you haven't seen my interview with Vince Lancy, be sure to do so. We just posted one earlier today. I know it was recorded on Thursday, right before the crash. I didn't know there was going to be a crash on Friday. I wanted to take Friday off, so I didn't do any interviews on Friday. But lo and behold, I can't take days off without being punished for doing so. But we'll be sure to get Vince on pretty soon to get another take here on what's going on in the markets. But he posted this video. Let's see what it has to say.
Ground receiving stations. China is building the world's largest power plant in space. By 2050, China aims to operate a 2-gigawatt solar power plant in orbit. This would result in continuous, clean energy beamed wirelessly to Earth, potentially 10 times more efficient than ground-based solar. The process involves constructing a solar array nearly a mile wide in geostationary orbit, 36,000 kilometers above Earth. This orbital giant captures sunlight 24/7, unhindered by weather or night. The collected energy will be converted into microwaves and beamed to ground receiving stations, where it will be converted back into electricity. Key milestones include a test satellite launch by 2028 to demonstrate initial power transmission and a 1-megawatt station in geostationary orbit by 2030 for long-distance beaming trials. This ambitious project, sometimes called the Manhattan Project of Energy, relies on super heavy rockets like the Long March 9.
Yeah, so you guys get the point. I mean, they need silver for all this stuff. So Vince is saying China needs silver. No, I agree with that. Oh, look who's on silver query page. It's me, yours truly. Oh, here I am again. So the hour draws near, silver bros and gals. And this is a link to the final countdown by Europe. All right, so this is from the Silver Chartist, an interesting commitment of traders report, COT. So let's see what he's talking about here.
I mean, you can go back. This goes COT for silver. Super interesting here. Now, granted, this data was taken on Tuesday, so we don't have the big run up on Wednesday and then the big sell off. But this is very noteworthy. I mean, you can go back. This goes back 9 years, and you can see that at intermediate peaks, these blue lines represent the commercial net short position, and they tend to be longer at interim peaks. So what do the bankers do? They short into rallies. That's just what they almost always do. Well, they're not doing that this time. Something is different, especially on the COMEX here. This measures futures positions on the COMEX broken down by category. So we've got the commercial bankers, the commercials, which is typically dominated by the big commercial banks, just a handful of. They're not shorting this rally. And after Friday's sell-off, it's possible, I'm not predicting this, but it's possible that they're net long. Is now looking at the bank participation report, some of the U.S. banks are already net long. It's kind of the foreign banks, the European banks that are net short that fall into that commercial category. But nonetheless, the COT has no doubt improved even more. So this would be
Yeah. So quick recap. Anytime we're in a silver rally, You tend to see spikes in bankers shorting silver. This is when the blue line goes further and further down. In this case, the blue line hasn't spiked. The blue line did not spike into, before the sell-off did, like it usually does. So what I think Steve Penny here is implying is that the bankers don't believe that this sell-off will be long-standing. So we have about 30 seconds left in the video. We'll finish up the video and move on to something else.
Case for, if you want to make a case that we just turn around and take out the new highs sooner rather than later, this COT report would fall into that category. So what I do is I just weigh the evidence, right? And then we assess the spectrum of plausible short-term outcomes, assign probabilities to each. So, I don't like to just stick my neck out and say, here's what I think is going to happen, and just pick one outcome. Well, that's kind of like gambling. Instead, we assign probabilities. So if you want to say that you think it's going higher right away, this would be a data point that would suggest that open interest has been declining into this rally. Something is different in the COMEX markets right now.
Very good point from Mr. Steve Penny. Flint says, unpopular opinion, we have yet to see a top on silver. This will likely come true. You know what? I personally, I do agree with that. I don't think this is the end of that breakout of this 40-year cup and handle pattern. I think there's got to be more to it than that. The debt-based system is dead, says Gold Silver HQ. Thorsten, I'm not going to pronounce the rest of this. Hashtag gold and lately joined by silver is mainly driven by fear, and fear is not a sustainable investment strategy. It's an emotional condition. Yeah, tell that to the central banks that have been hoarding up on gold. Hey guys, what are you so afraid of? Come on, quit being a bunch of pessimists. The dollar's fine. Come on, Fed. Come on, China, Russia. What are you hoarding gold for? What are you, a bunch of... Anyways. Yeah, you got a little monkey here with a silver bar. Beautiful. All right, silver reversal in progress. I don't know about that. It's $81 now. This is 2 hours ago. Calculating how much silver I can buy on this dip. Are you guys buying the dip, by the way? Let me know if you are. Because if you are, then I've got to point you to our good friends and partners on this program, my affiliates, the Bullion Standard Pro. We did have Kyle on the other day. Nice transition, right? Slick transition, I know. But the Bullion Standard Pro, if you're looking to add into your stacks at these relatively low prices, I know $81. If I would have said $81 a month ago was a low price, I'd be laughed at. But $81 as of today, if you want to get in now at these levels, I highly recommend that you check out the Bullion Standard Pro. We do have a special link in the description box down below. You get 10% off your first month. And basically how it works is that it's essentially the Costco model. You pay $35 a month and you get access to super low pricing, pretty much wholesale level pricing on their gold and silver offerings. So for example, if you look at their, if you look at a 1 ounce silver wrap, okay, here's a chart. And this is aggregated from live data. So average retail price on a 1 ounce silver round today is around $93.48. If you sign up, become a Bullion Standard Pro member, you can get it for $85.99. That saves you $7.49. Now, if you buy 20 of them, you're looking at $137 worth of savings. 100 of them nets you $626 worth of savings. And 500 of them nets you $2,800 worth of savings. Now, as you could probably figure out, this pretty much pays for itself. It's essentially a layup. You pay $35 a month and you could save into the hundreds, if not thousands of dollars, provided you buy enough volume of gold and silver. So if you're one of those people that buys huge volume of gold and silver, check out the membership. We do have a special promo code in the description box. Use COSM10. That's COSM10 at checkout. You get 10% off your first month, and you've got to use the special link down below. All right, let's go back to X here. Oh man, I see the silver price here selling off. Look at that dump. My goodness, $80. Are we going to get below 80? Well, We'll let it cook. We won't make it nervous. We're not going to look at it. We'll let it do its thing. And we'll go back to X and look at memes until it goes back up. All right. All right. Anyways, so Income Shark says gold and silver did this and it's at all-time highs. Basic supply and demand. He's already said he's dying with it all. What? What is this in relation to? Oh, it's Michael Saylor. Does he not realize that if he buys all the Bitcoin, that's no longer worth anything? Oh, yeah, I think he's screwed. Like Bitcoin's at what, 76,000 now? Anyways. After the housing market crash, I was told the dollar was going to collapse and the best move was to buy silver. Commercial said it was going to 100. Shops are selling it like crazy. And I thought I was a genius preparing for the end of the dollar. Don't fall for the lies. Well, look, these kind of guys actually make me more bullish when there's all of this FUD in the air when it comes to silver. You notice all the bullishness is pretty much gone. When we were at $80 a month ago, or what am I talking about? Less than a month ago, you had so much bullishness, so much positive sentiment in the air. This pretty much reset sentiment. And we're pretty much back. We're still at the same level that we were 2-3 weeks ago. North Star bat charts from Kevin Wadsworth. We will have the North Star guys coming in this week, by the way. So be on the lookout for them. This is his silver roadmap. Let's see what it looks like. So, yeah, so this is the cup and handle. And you'll see silver got pretty extended in these Fibonacci levels. And he anticipates it coming back down to around this level here. This looks like 70 some odd dollars, maybe upper 60s before it rallies back up. So it looks like the rally should occur somewhere in 2028. So if I'm not mistaken, if I'm reading this chart correctly, I think Kevin is saying that we might be correcting for the next year or two until we bounce back up into, what is this, $400 silver or something? We're going to have these guys on this week to clarify all this. So be on the lookout for that. All right. Russell Napier is a real honest to God economic historian. Truly rare breed. He was on the ground in Asia before and during the financial crisis. So what does he have to say here? This is a 2-minute clip. Let's see what he has to say.
He said, look, you had a quote that I thought was funny. I want to hear you explain it. You said, look, if you're hiring a money manager today, hire one from South Africa or Brazil. What do you mean by that?
Well, what I mean by that is that they are familiar with financial repression. So my job is to go and visit institutional investors. And when I talk through financial repression, what it looks like, they go, we're never going to get that right. We don't have any of the skill sets for that. Even the old guys in here, we started after the Thatcher-Reagan revolution. Government was here and it started shrinking and markets started growing, and we learned about investing in markets, and the government would always get smaller, the markets would always get bigger, and that's our skill set. And we've nobody in here who's understands what you're talking about. Well, go to South Africa or Brazil because they understand it very well. It's been a financial repression, at the core of which is the state or the government getting involved in allocating savings or manipulating savings, stealing savings, if you like. But very smart South Africans and very smart Brazilians have still made money in this environment legally. Some of them have done it illegally, but there are guys who've done it legally as well. And they've got a skill set to play a different game. So we're playing a different game. I mean, in that period post-World War II, not everybody got poor as the value of savings was eroded. Some people got very wealthy. Other people were able to borrow money, buy property or whatever. And fortunes were made in the post-World War II period. But most savers, looking back, using the skill set they'd had since before the war, lost out. So I do think people who invested in emerging markets are more familiar with this. Even China itself, people who invest in China are very familiar with financial repression, the state action, state moving resources around. So those people are more likely to be able to inform you, as to at least have them on the team to inform you. Because when something happens, when a government announcement comes out and you think it means A, they understand that it means B.
All right. So Yeah, wise words from Russell Napier. So this is the amount of silver top signals for gold and silver will be obvious to most in hindsight, but it should be obvious now, especially to crypto people. Mhm. So I think I don't think there's been any new developments tonight, has there? Let's take one last look here on X. I think that pretty much covers it, guys. We're going to take one last look on the charts here. 81.21. Looks like we bounced off. We'll see if we can keep above $80. And yeah. So let me tell you who I've got coming on this week. All right, let's see. Tomorrow I've got and I'll be making a post about this later on my Substack tonight. So if you want to leave questions, feel free to do so for those guests. But tomorrow I'm recording with Gary Savage in the morning, and then after that, I have another recording with Adrian Day. Tuesday, I'm recording with Chris McIntosh from Capital Sexploits. Thursday, we're doing a panel with Eric Jung and Francis Hunt. Friday, we're doing a recording with the North Star Bat Charts boys, Patrick Kareem and Kevin Wadsworth. And I'm still trying to fill out the 2 more slots here for the rest of the week. I'll let you guys know when those slots fill up, so you can leave them questions that you want asked. And of course, the way you can leave them questions is by joining my Substack. Link down below, capitalcosm.substack.com. You can also make guest recommendations too. If you want me to get someone in particular on the show that you want to hear from, you can also make those recommendations too. And you can either do that at the on the Substack or through the Discord. And again, I'll post a link. But you can access the Discord through the Substack. So yeah, there's that. Hit the like and subscribe, everyone. Let me know what you thought. We'll see what happens tomorrow. It should be an exciting week. And yeah, hoping to fill out those next 2 slots as soon as possible. I'll let you guys know who we get on. And yeah, see you tomorrow.